of Yellow Tunnel, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions, geopolitical risks, AI valuations, exposure to private credit, what drives the market, and decide whether we have reached the top of the market and now this is the beginning of a bear market, or is this just a temporary pause in the bull market and the bullish market will continue. And the goal is to answer any questions you might have. So please enter your questions. We're gonna usually this presentation takes half an hour, and then I'll open it up to any questions you might have about your subscription, or if you're looking for a subscription, or market, or trade ideas, anything you have a question on. The goal is to answer that. For those of you who are new, welcome. This is my brief bio. My background is in technology. I have a master's degree in computer science, specializing in artificial intelligence. I wrote my thesis on the artificial intelligence 25 years ago. And always worked either CEO or investor or executive in several startups here in Chicago in fintech space. Options Express was online broker dealer, went public. I worked at Groupon, consulted Groupon, MediaOcean, worked for Pick6 and several other broker dealers. So I have a lot of knowledge and background in the building technology, building AI models to find opportunities in the market, to find signals, to build a portfolio, rebalance portfolio. So that's my background. Started Yellow Tunnel, started TradeSpoon 12 years ago. Yellow Tunnel spending more time on the trading psychology, right? Especially when the market, there's uncertainty in the market, it's very important to be self-aware and use some of the trading psychology concepts. And about 2 years ago, we have Keith Harwood who joined me. TB, welcome. Chuck, welcome. Who joined me and us. And Keith Harwood, his background is in trading, right? He started his career on the exchange, in options exchange, futures exchange. He worked with the hedge funds. He has MBA from the University of Chicago and degree in math. So he brings a lot of trading experience. So between two of us, we're managing live trading room, and we're providing a lot of knowledge in signal generation, right, running models, and also in how to use these models to trade. Disclosures are very important. I'm going to go through specific trade ideas, specific setups. So it's important that if you haven't seen the slide before, you visit the link optionstrading.com to understand the risk associated with trading stock and options. And you can always pause the screen if you need more time to read the disclosures. Right, before we jump into trading psychology, let's talk about current market conditions. So if you look at the market, what happened to my market screen? I mean, right now, the most important, I would say probably, I mean, they're highly correlated, but 10-year yield, right? 10-year yield is important. We got to 430 and it got rejected, right? This was the 2026 high. It was the almost September high. This was the high of 2022 peak of the last bear market, and we did pull back. Right? It was the hope that the war in the Middle East will de-escalate, and the energy, the oil and gas can flow through the Strait of Hormuz, Arabian Sea, right, Persian Gulf, and inflation will subside. Right, so kind of a risk-on day. And in same correlation, dollar also pulled back. It stayed around, it broke through 100 level, marginal new highs in 2026 and 2020. You would have to go back to all the way to June or May of last year to see dollar above 100 or above 100.50. High yield, right? So spread of junk bonds, credit default swaps, to raise debt especially in the AI related names or software related names that continue to deteriorate. You can have a sharp pullback in credit. Not as sharp as back in May, but still took out that 79.80 level and trading below that level. QQQ is Sitting at 200-day moving average, it's retested this year lows. It broke through December lows and got very close to the, I think overnight session we were at 590, 588, very close to the December, October, and September lows. If you look at the spiders, same setup. You have 660, close to October, November lows around 654, and 200-day moving average. And for kind of a weak, so far weak rebound, we're still below 50 and 100-day moving average. And main driver for these commodities, for these asset classes, are oil prices, right? Oil last week got to close to 120 crude oil futures, and now they're settling near 95 level. Was as high as 98 today. So that's the market. SPX is fighting for the 6,700 level. We're retested 50% retracement, right? It's a 50% retracement from the all-time highs to the October, November lows. And we're retesting basically 6,700 level. So the question is this the end of the bull market, right? Are we going to make new highs this year and the market is going to continue going higher? Or is this the end of the bull market and this is a pattern of lower lows and lower highs, right? A lot of people already start comparing this to 2007, 2008 financial crisis. Oil prices went higher, it wasn't the exposure to private credit, but exposure to mortgage-backed securities. And finally, some of these companies like Bear Stearns, Lehman went under. But it was a process, right? It was for at least a couple of years where the rates were elevated and mortgage-backed security would just continue to deteriorate and then fall apart, right? So is this 2008, 2007, where something's going to break and the market is going to continue to break down, or will the bull market resume, right? Because 2007, 2008, completely different setup, right? Banks are a lot more financed, better capitalized. U.S. is net energy exporter, right? We were importing 3 million barrels a day. Now we're exporting 3 million barrels a day. So it is a different world, but nonetheless, there are some similarities that it's worth reviewing. So on one hand, the question is, and I go through these exercises because the trading is kind of a distribution of possible outcomes, right? If you look at the SPX gamma exposure, right, we're trading right at that borderline of positive and negative gamma, right? Still kind of below, so it's still in negative territory. And you have a lot of positioning at 6,800. Then you have a lot of gamma position. A lot of people have open interest, but basically puts, right? The orange is a put, number of puts. So you have 6,700. This is where the market is right now, right? Market is at 6,700. And then the gamma exposure is once it loads. So 67.70, so it's right, still trading in negative territory. The put wall is at 6,700 and the call wall is at 6,800, right? So you have the largest concentration outside of 7,000 strike. Largest concentration right now is 6,700 and 6,800. So you have 6,800 is the wall and then 6,700 is the wall. We're trading right at the 6,700. We are approaching expiration. Tomorrow is the VIX expiration. And then we have equity expiration. You can see majority of the concentration right now is in March. These futures and equity contracts will expire this week, and then people will reposition, right? If they think that the war is about to end, then the market could have very strong move to the upside, and if the war escalates, you could have sharp pullback to the downside. So that's position again. If you look at let's look at, well, March is over. Let's look at April, right? We're approaching tax season, right? Deadline is around April 15th. Expiration is about April 17th. So, it's hard to predict what's going to happen tomorrow, let alone April. So let's go into next earnings season. Taxes are due. We're getting all refunds for writing off our taxes, right? The salt tax, writing off the property taxes, right? No more caps, so people are going to have more money, hopefully. So one standard deviation move, right? We are at all-time high. Maybe not breaking 7,000, right? But at least retesting 7,000, right? Because trading is distribution of possible outcomes, right? Going back to your statistics class. So on one hand, we could be retesting, making new highs and getting to the 7,000. You have a lot of overhead resistance, which we couldn't break. So I doubt we're going to break it by April 15, but we could get to 7,000, right? So that's scenario number one, right? We get to 7,000 or above. Scenario two, we're stuck in this range, right? Because it doesn't look like the war in Iran is going to end in the next couple of weeks. It could be, at least a month, maybe more, at least till April 15. Right, so we're trading in scenario two, right? Good news, market rallies to 6,900, maybe 6,800. Then bad news, we're retesting the low 6,500, 6,600. So that's scenario number two. And then scenario number three, we break through the recent lows around 6,600. So we're on its way to retest 6,000, 6,100. There's a lot of positioning also at 6,000 level already. A lot of people are buying 6,000 puts. All right, so that's scenario number three. Right, because the longer the war in Iran continues, the higher the energy prices, higher inflation, higher gas prices, taxing on consumer, and increased probability of recession. Right? For if there is a prolonged elevated prices, right? So that's scenario number three. So how many of you say, and this? So those are the three scenarios, right? Based on positioning, based on the expiration data, and supply and demand for options data, right? We could be at 6,400, we could be at 7,000, right? So if I look at the chart now, kind of same idea, how many of you say we're going to make new highs as we approach in next earnings season, right? Banks are way oversold, due to credit exposure and oil prices, and valuations are improving from all-time high. Evaluations have been improving because we are growing at double-digit growth. So companies, S&P 500 companies, are growing at double-digit, albeit lower double-digit, but still, right? Or scenario two, just too much uncertainty. We're in the middle of the range. We're just going to stay. I mean, we could maybe get to 6,900, but we could also revisit 6,600 to 6,500. So that's scenario number two, right? So that's two. This is one. And then scenario number three, we break through this level, right? And fears of recession. United States doesn't want to fold their cards. They don't want to help European Union to get more oil, and European Union doesn't want to help United States to get more oil through the Strait of Hormuz, and that continues on into the April. How many of you say scenario number one? Alex, thank you for coming back. Chuck, Helmut, Jack, Martin, Patrick, Raju, TB, Brad, Bob. What do you guys think? Down to 6,500 if the war continues. Okay, so that's scenario number two. Anyone else? Two. All right. So majority of you said two. I'm gonna go with two. Right. I think short-term bears are in control, and looks like all the rallies are kind of faded, right? People are selling to this train. Crude oil is still near 100, and every time I go into my friend Grok, right, and basically ask if anything has changed. Well, this is Murphy. a small number of vessels, mainly India, Pakistan, and Chinese link, have successfully passed in recent days through the channel, right? So that means Europe is not getting the oil, China probably getting less oil, South Korea is getting less oil, and every time you turn on the news, there is really no solution, and short term, and uncertainty persists. So that means most likely, at least until next earnings season starts, we're trading in the range, right? So scenario number 2. And again, in the live trading room, I will talk about, you have to be prepared for all 3 outcomes, right? Let's say you're bearish, right? Because you think the war will continue. I mean, it's worth to at least start concentrating on positive news, right? Because, all it takes is for Iran to basically say, listen, we declare, victory, because, we're still, the regime has not fallen. We're still, everybody's buying our oil. We're going to rebuild our arsenal. Nobody's going to invade us, and we defeated, the largest army in the world, right? Strait of Hormuz reopens, and we're at 7,000, right? Very quickly, it could happen in a matter of hours, right? You could also have the opposite effect, right, where Iran does not capitulate and basically wants reparations and wants guarantee from the United States and Israel that they will never attack them again. Right, the United States does not want to fold their cards. They're already kind of vested into this war, and they're not going to pay reparations, right? And then the market does kind of, falls apart, right? If the oil prices get to 150 to 200 by May, June, then you have scenario 3, all possible scenarios. But distribution of possible outcomes basically usually tells us that it's somewhere in between, right? At least for the next few weeks. So I agree with Stu. If we get to 6,800, right, 6,900, I would consider raising cash, right, or adding to your hedges, or selling stock, or buying or shorting stocks, right, or buying puts, buying inverse ETF at resistance 1, resistance 2, and a 200-day moving average. At 6,500-day moving average, I would consider that these are buyable levels, right? And you have a clear stop level, right? If we break through 6,500, right, or 6,400, that would be probably the last standing. Right? If we break through this level, then we're probably going to 1,000, right? So I would trim the position. So that would be my approach to the market, right? We have a fear of missing out. That all it takes is one positive news and the market rallies, and you also have a fear of future regret, that oil prices will be 150 or 200, and then at some point there will be resolution to this oil crisis. There always is, and then you need cash. You need cash because this is an opportunity to invest, and if you don't have cash, then it's a problem. So that's my take on the market. Keep an eye on crude oil. Keep an eye on the 10-year yield. I would say the line in the sand is 430, and for dollar, taking out the highs, 100.50. I think the market sell-off will continue and accelerate if we take out this level. If VIX drops below 20, then I would say must be some kind of a end to this insight, and maybe it makes sense to start adding to your bullish positions. But first thing first, I'm watching SPX, and I think as long as we are below 60, I would say 68.40, right? 68.40 at this point is 50-day moving average, 100-day moving average sloping downwards. Bears are in control, right? As long as we're down below this downtrending line, bears are in control. This is resistance. All right. Any questions? How do we help on yellow tunnel? So we have models, right? So we have aggressive power trader. Basically, the model runs every day. It's AI-based neural network. It does cluster analysis. It groups stocks or themes into one group, and then looks at the earnings consistency, looks at the prices, and makes predictions. So recently, the sectors that are related to energy, like CF, Dow Chemical, energy names, or utilities, right? They are definitely, if you look at XLE, it continues to break higher and making new highs. And if you look at the utilities, right, they continue to stay at near all-time high. So energy-related names continue to grind higher. Also, you know, if you look at the Dow, you know, so it's not all stocks are being under pressure. You have stock like Dow is actually able to do well in March, one of the best March, because it had strong earnings and AI is still alive, right? Micron, NVIDIA said that everybody's buying NVIDIA chips. Micron continues to rally. So the AI theme is still there, right? So obviously we're not in recession if all these companies invest in, you know, 50, 60 billion dollars a year on infrastructure, right? They need memory, they need data centers, they need Caterpillar, they need build out, they need energy. So, right, so you do have that exposure. But obviously on the other side of the argument, you have Blackstone Group that's down, you know, 50%. You have KKR, right? Companies that are exposed to private credit that probably, you know, investors are concerned, they're taking their money out, right? Kind of was similar to 2008, right? And you do have, you know, 50, 40% bear market, major financial institution. It's not just KKR, like JP Morgan, you know, also down 20%, right? JP Morgan is down, you know, Wells Fargo, and so on and so forth. So it's not only that AI stocks, some of the AI stocks are trading in the bear market territory, like Palantir, Microsoft, but also financial sectors and now industrials kind of also join. Their, you know, industrials are also under pressure and continues to deteriorate. So that's aggressive power trader. You get signals every day. You can type in, a lot of people ask, you know, can I analyze my own symbols? Yeah, you can type in Apple, you can type in NVIDIA, right? And then if there's an options data and it's a liquid name, we do have predictions. You have your support. NVIDIA, consider buying at 180. If it gets to 186, consider, you know, trimming your position, right? And this is to optimize your entry and exit. These numbers get updated every day. And, you know, NVIDIA, this is, now that the VIX got to 30 and still above 20, as you know, as we speak right now, you know, you don't want to overpay, right? If you want to be long NVIDIA, probably at 180 is the better level to enter. If it gets to 186, right? This was posted last night before the market opened. NVIDIA got to 185.40, and now it retreated back, right? So the model is doing good job telling you that at 185, 186, maybe don't chase the stock. Let the market come to you, right? At 180, very strong support, high opening position at 180. Maybe it makes sense to go long at 180. And you can see that long term, NVIDIA still in strong demand. Maybe not in April, but maybe in June, May, June, energy crisis is going to be over. Midterm elections, we're going to get tax credits and, you know, lowering income tax and lowering corporate tax, and, you know, NVIDIA could get to 195, 200 all-time high or high. So that's AI analysis. You have history of these signals. So every day, if you want to see, okay, what was the signal yesterday? Very similar, right? It's still energy, HP, Dow, CF, right? If you look at the Dow, you look at CF, exposure to chemicals, fertilizers. These are the stocks that continue to drive the market higher. That's aggressive power trader. You do have live trading room. I encourage everybody to participate in live trading room. Some of you already go to live trading room. I appreciate that. If you cannot go, you have other commitments. I get it. You have recordings. Please watch live trading room recordings. If you want to learn about options, you can look at the workshop recordings, right? Type in a topic, options, technical analysis, you know, portfolio rebalancing, and you will find webinars. We have now 14 years worth of webinars. Probably on any topic you want, there's a webinar with different speakers. So that's aggressive power trader. Weekly power trader, same idea. It runs on the weekend, not every day, but on the weekend, and it gives you ideas for the week. right? Same thing. It's all chemicals, CF, Dow, HP. Chemicals or energy-related names. Some of it agricultural products, some of them chemicals, some of them, oil, into the upstream oil companies, and you have in the utilities, right? L&T, and then again energy names. Some of them I actually trade, right? So if you look at the orders, you can see I'm actually bought Murphy Oil call spread, bullish call spread, bought it at 360, trying to get out at 460, right? So some of these trades I trade, right? So you will see orders. In Dynamic Power Trader, right? In Dynamic Power Trader, you can actually see all of my orders and positions. So I have JEPQ, I have KRE, I have Murphy Oil, I have NOC. So all of the stock and options positions you will see in Dynamic Power Trader. I'm hedging, right? I'm concerned that we could revisit the lows. So I've been hedging the portfolio with QQQ put spread, 590, 570 put spread. You can see in the past 7 days, if you type in QQQ, or last 30 days, actually, it's been a pretty successful trade, right? Where every time market is overbought, I'm buying QQQ put spread. Every time it's oversold, I'm closing, right? So I closed for 536. Now I bought it for 454. So, and it's a combination of stock and options, right? NOC is actually a stock, right? So aerospace and defense, Northrop Grumman. I've been trading around this position, but I still have the position intact. So combination of stock and option trades. Earnings Power Trader. If you look at the Earnings Power Trader, Alibaba, FedEx announcing earnings, Micron announcing earnings. I have to add Micron. So this is where I trade option spreads. So it's a lot more of a day trading. It's a short-term trading. I hold position usually 1 or 2 days, you can see all the orders, all the positions, and usually I trade option spreads, right? So very aggressive looking. If I sell premium, I'm looking for 30-40% return overnight. If I'm long volatility, sometimes I'm looking for 100-200% return. So it's a very aggressive strategy, Earnings Power Trader. And then Profit Accelerator is where I trade stock. Well, you would see stock examples and option as well. So that's Profit Accelerator. I do encourage you to schedule a consultation with Keith. He's our Chief Investment Officer. We manage portfolio, we analyze signals, we backtest our strategies together. His degree in math, and he's also been a trader. So I encourage you to find a time that works for you and talk to Keith. He can help you with your trading plan, how to keep a journal, how to deal with uncertainty in the market. So, first consultation is free, so there's no commitment. He can help you explain some of the products we have, and I think that's time well spent. Also, we have a relationship with Avantgarde. If you were in my live trading room, you see that we are I am using Avantgarde, right, as a trading platform. We do have a marketing relationship. I'll drop this in the questions. I'm also going to put it in the chat so you guys can see it. But this is the idea that I encourage you to actually have segregate your accounts. One of the strategies is segregate accounts for different trading services or trading strategies. If you commingle everything into one account, then you don't know, maybe spreads, maybe you do better with spreads, maybe you do better with stock, maybe with single options, maybe earnings. A lot of people like earnings. So I would encourage you to have separate accounts. You can open up an account in Avantgarde. Right? If you do open a fund account in Avantgarde, the first 3 months of any yellow tunnel services, we will give you a refund. You can sign up for any services that fits you. And the idea here is that this is a broker dealer that does assisted trading, right? You can always pick up a phone and you can talk to a live broker if you need help with setting up a trade or just bouncing ideas against, with brokers. They have a team of great, brokers that have been trading for many years. And they also have full lot of directional capabilities, right? If you want to auto execute our premiums, our dynamic power trader, if you want to auto trade this, you know, we can auto trade in your account as well, right? So this is something I would consider. I put up the link in the chat. I'll also put up a link to talk to Keith if you want to bounce some of the ideas with Keith. And that's 12:32. That's mostly what I wanted to cover. We have a lot of new people, so I appreciate Alex, Chandu, Chuck, Helmut, Jack, John, John, Martin, Melanie, Patrick, Roger, TB. Thank you very much for joining. Again, right now, what the model is detecting is energy-related names, right? If it's an energy-related names like Dow Chemical, LYB, CF, then the stocks are in strong uptrend. AI-related names, whether it's Iran or ARC Innovation in general, we're still not in oversold levels, right? If you look at our sister company TradeSpoon, right? If you run the stock forecast toolbox, again, sister company, very similar. Some of the tools are only on stock forecast. Stock forecast is only on TradeSpoon. But if you look at the 6 months prediction for spiders, 694 is overhead resistant. This was posted before the war started, and 626 is support. So we have not reached oversold levels. And on the negative news, if the crude oil stays around 100, every day that uncertainty persists, it increases the probability of testing 630, 620, 610 levels. So hedging, be long and short the market at the same time, I think is very important. In live trading room, we cover these concepts, right? Concentrate on things that are within your control. Positive and negative visualization, right? Look at these what-if scenario, fear of missing out versus fear of future regret. And be long and short the market at the same time, right? This is some of the trading plan that I share in the live trading room, right? Position size, it's all about position size and drawdown, right? So risk management, and then be long and short the market at the same time. All right, if there are no questions, then that's all I have for today. Consider joining, AGT and Yellow Tunnel, or if you just want to talk to us, please schedule a consultation with Keith. Thank you very much and have a great day. Pelletier still in uptrend. I mean, Pelletier is in downtrend, but it's not making new lows, right? It's not making new lows. So my guess, just like IGV, that this low is set, right? So but we could revisit the lows. So you have 25 points to the downside, and at some point you have 45 points to the upside. So risk versus reward, if you have a long-term horizon and you don't think we're gonna have a recession, then this is a good setup. Personally, I think we will resolve this energy crisis. Oil prices will drop. It might be tomorrow. It might be a month from now. I don't know. But if you're a long-term patient investor, I think risk versus reward, it makes sense to own Pelletier and some of the other AI and software names. Thank you very much and have a great day.